Good morning. This is Larry McMillan with a stock market update on Monday, June 17th. Well, we're still seeing pretty much the same thing we've been seeing recently is that the S&P keeps making new highs, so that's bullish and that keeps us in a core bullish position. But the market internals are not really following along, and eventually that could be a problem. At the moment, it's not yet, but let's go to the indicators just to see how that might work out. We do have a McMillan volatility band sell signal in place. It's barely hanging on. That's the only sell signal we actually have right now, although a couple other things are getting close. For example, the equity-only put-call ratios are at very low levels. That's extremely overbought. In and of itself, that's not a sell signal, but the standard ratio has now curled higher, and the weighted ratio is also being rated as a sell signal by the computer analysis programs that we use to analyze these charts. We don't rely 100% on those computer analysis programs, so we want to see visual evidence. And so at this point, we're not seeing the weighted ratio turn higher yet. We had a little bit of the same thing back in April, and eventually it did lead to a sell signal. So this might easily do the same, but right now, we do not have a confirmed sell signal from the equity-only put-call ratio. Breadth has been pretty bad in the last couple of days, and that has canceled out the buy signals that we had from the breadth oscillators, but has not yet created any sell signals. So at this point, we would just have to say the breadth oscillators are oversold, and eventually from that area, they could generate buy signals, but right now they're just in a neutral status. We saw new lows outnumber new highs on the New York Stock Exchange on Friday. That's the third time in the last 6 days. But we have a buy signal indicator there that's still on a buy signal. We have an indicator that's still on a buy signal. And it won't be stopped out until new lows exceed new highs for 2 consecutive days on the New York Stock Exchange. And that has not happened yet, although it could happen as soon as today. Volatility indices have remained very low. So that's bullish for the stock market. In reality, they're not a problem until they begin to rise. So VIX in particular, as long as it's not closing above its 200-day moving average, then everything is fine for stocks. So the trend of VIX signal that we use is still on a buy signal at this time. Also, the term structures of the VIX futures and the CBOE volatility indices, those are sloping upwards. That's bullish for stocks too. So the bottom line is that we only have that one sell signal. There's a couple of things that are getting a little shaky. New highs versus new lows, the breadth oscillators, equity-only put-call ratios, but we're not getting confirmed sell signals there yet. And even if we do, the S&P chart is still very positive with S&P continuing to make new highs. So there's a gap that would be filled down at 53.70, then there's support at 53.30, and then more support at 52.60. A close below 52.60 would be a game changer. Those other areas would still be within the realm of a new, or not new necessarily, but a bullish leg in the market. So, as I said, not a lot has changed. There's some things that are in flux, but they're not really changing yet. I invite you to visit our website, take a look at our newsletters where we cover these indicators daily. And meanwhile, have a great week trading.